Use these 5 tips to help you guys pass your futures prop firms in 2025. My name is Zach. I'm an exclusive analyst in the StockDads Discord, and so far in 2025, I've withdrawn $50,000 from prop firms, and I want to help you guys do the same. In this video, I'm going to talk about 5 different topics that I use to help me be very consistent with my prop firms, and hopefully you guys can take something away from them. Just for the sake of transparency, on the screen right here, you can see my Take Profit Trader login. And in just the last week alone, I've almost taken out $25,000 that have already hit my bank. The main prop firm that I personally use is Tradeify, but I also use Take Profit Trader and Top Step, and some of the ones I've used in the past are My Funded Futures and Apex, which I no longer use. If you're not already trading with some of these prop firms, check the description. We'll give you guys a discount to sign up on any of these firms. Hopping right into it, guys, number 1 on this list is Zoom Out. And what I mean by zoom out is try to focus more on the higher time frames. So many people get caught up intraday because they don't have actually a good idea of what's going on in the bigger picture. In order to understand what's going on in the smaller time frames, you have to have a really good grasp going into the day on what the big picture is telling us. So for example, a lot of people have had trouble these last few weeks. At the time of recording this, it's the start of March, and we had a pretty hefty sell-off. But if you look on the bigger picture, we've simply been range bound from really just the end of October up until here. And now we're finally getting some type of potential breakdown or maybe failure to go lower. But bigger picture, this is just one really big range. If you now look at the weekly chart, you can see that the weekly chart was a little bit extended, yes, and now the weekly potentially can be flipping to the downside for the first time in well over a year, but only time will tell. And another big thing that also we have to implement is the monthly chart. And you may say to yourself, why use the monthly chart if we're not trading on the monthly time frame? Well, the monthly chart, like I mentioned, really just gives you a good idea of what's going on. As you can see, like I said, we really just have been range bound the last 4 to 5 months. And now we're finally potentially, right, keyword potentially, starting to break down out of this multi-month range. If we are going to break down more, just simply using EMAs, without using any supply and demand, ICT levels, none of that, just simply using unbiased, not subjective EMAs, our target would be the monthly 20 EMA, which as of right now is sitting at 55.45 roughly. Just something as simple as understanding where the monthly EMAs lie can definitely help you as a futures trader, knowing that if at any point during any of the days you may say, oh, where could the next downside target be, or do we still have more room to the downside, you can zoom out to the daily, weekly, monthly and get some of those targets. As you can see here, based on the monthly, we are a little bit extended. As you can see, we have not tested the monthly 20 EMA directly since we flipped back into an uptrend in November of 2023. So a retest could be welcomed. And in my opinion, it's probably necessary to either tag it via time or price before that next leg higher. Now, number 2, I just talked about using some of the EMAs. And so number 2 is going to be implementing EMAs, and in particular I use the 8 and 20 EMA, which just based on my data and my bias, I think are the best EMAs for futures trading. Many people in the past maybe have been turned off by EMAs because they maybe were not taught the correct way, or simply they don't know what to look for. However, in my opinion, I think EMAs are an absolute cheat code. I am going to teach my exact strategy in my upcoming mastermind in April, so make sure if you want to learn in depth to sign up for the waitlist. It's absolutely free to join the waitlist. All you need to do is put your email in, and again, we'll put that in the description. But for beginners, the most basic concept you guys can use is the 2-minute, 5-minute, and 15-minute EMA flips. What that means is the EMA flip essentially is telling us where the trend is going. If we flip to the upside, that means that on that specific time frame, we are now going to an uptrend. Vice versa for the downside. If we have an EMA flip down on that specific time frame, we're going to the downside. So as you can see right here on this 5-minute EMA flip here, this marked the intraday low of the day. On Friday, we were in a downtrend for most of the day since we opened, and then it wasn't until the 5-minute flip where we could definitely say that there was some type of bottom. And then from there, every single 5-minute 8 EMA dip and 20 EMA dip ended up being buys. If we go to the 15-minute, any single time we dipped below the 15-minute acted as support here, the 15-minute 20, and then we ended the day right here above the 15-minute EMAs. But in my opinion, you can definitely get dozens and dozens of actionable trades between the 2, 5, and 15-minute EMAs every single day. And again, the 8 and the 20. There's a bunch of different ways to use them. You can wait for the reaction. You can buy them directly. You can wait for a buy setup or sell setup. These are some of the things that I will be covering in the future. But for now, in my opinion, if you only use them to identify the direction and identify the trend on the day, right then and there, that'll give you a step up on a bunch of other people that probably are a little bit confused as to where the real trend is. And just keep in mind, guys, EMAs are great. Any indicator can be used, but the best thing to do is have a really good understanding of price action and candlestick analysis. And again, this starts with the higher time frames, top-down analysis, understanding the monthly, weekly, daily, and then dropping down to the smaller time frames. Number 3, this is something that I don't think is out there in the world. Maybe I've made it up. I'm not sure. I call it the 15-minute rule. What this means is if you're at any point looking to change trend or change bias, right? So let's just say at some point you're looking to go long, and for some reason you think your long has been invalidated and now we're looking for shorts, or vice versa. You think maybe earlier in the day shorts were valid, but then you're looking for longs, right? If at any point during the day we're looking to flip our bias, I call it the 15-minute rule, and that means between bias flipping trades, wait 15 minutes. Now you may say why, right? And to be honest with you, the real answer is so you don't have FOMO and you don't overtrade. Most people at times will end up chasing what they think could be a reversal or a bias flipping trade, where in reality, and based on my thought process, if there is some type of bias flipping trade or price action or market structure shift, that idea of the flip of the bias of the market structure, it should still be valid in 15 minutes. A good example right here. You can see this 5-minute EMA flip right here. Once this 5-minute EMA flips, we go from around 57.10 on ES all the way to 57.45. What do we then do? We just trapped all of the late bulls and had a 25-point pullback. But in reality, all this was doing is retesting VWAP, retesting the 8 EMA, and retesting the lows from the previous day. This now eliminated anybody who tried to chase out these longs, and they quickly got reversed back up. Again, other people with other strategies could say this is for different reasons, but in my opinion, this is simply what that is right there. So if anybody did miss this entry and they ended up chasing the longs, or for example, let's say you were short right here and then wanted to chase, it's better off to wait for a pullback, wait for the 15-minute rule to apply, and then look for an entry from there. The best entries will come on the pullbacks. And with that being said, we're hopping into number 4, and this can be a little bit controversial and maybe a little bit more of an advanced type of technique here, but number 4 is going to be talking about taking entry on longs when the candle is red and taking entry on shorts when the candle is green. I've touched upon this before, but in reality, the best risk to reward comes from when the candle is opposite of whatever bias you have. So for example, if you're looking to take long off of the 8 EMA, the best bet for the best R to R will come as the candle is fully red. And why is that? For example, if you were looking to long right here, if you were to long, and let's just say you want to put your stop loss underneath this 56.97 level, because at that point that would make the trade invalid. You simply would have a 1-to-1 risk to reward, and this trade would have worked. Now, if you were to wait for the buy setup to set up, or if you were to wait for some type of a reaction, let's say back over at least 57.25s. Now, if you're going to take your entry right here and your stop still wants to be underneath this level, now it's going to take a lot more of a move up, which in this case we did get for that 1-to-1 trade. If you're already okay risking X amount of points, you already know what you're going to be looking for. So if you're going to be looking for a bounce, I never want to say anticipate, but you should know what you want to see. So again, not in every instance you're just going to spam the longs as the candle is red, but if, for example, you're looking for a pullback to the 8 EMA, you're looking for a pullback, a 15-minute pullback, whatever it may be to go long, you can almost anticipate what should happen next. And again, we're not here to try to predict the future, but in theory, that's actually what traders are trying to do. We're using the past data to make a thesis for what's going to happen in the future. There is a time and place, which I will talk about in my mastermind, talking about when to do and when not to do these type of strategies and when to simply wait for the proper reactions and buy setups and sell setups. But you'll find oftentimes that market makers will take their entries where your stop loss would be and vice versa. So I would just simply suggest, for example, if you were going to take an entry right here, as the candle is already going to be closed, yes, in theory, this is a bullish setup. You could put your stop under here, but you would have already gotten the entire move if you simply would have taken just the reaction. Again, this is a little bit more of an advanced technique, and I'm not saying to do this every single time, but there is a time and place to take these aggressive longs or short when the candle is opposite of your bias. Before I get to the last one, guys, if you appreciate the video so far, if you think you got something out of it, do me a favor, drop a comment down below, subscribe, and follow me on all socials at Zach Austin Trades for more trading content just like this. So without further ado, guys, the last one on the list, number 5, it may seem the most simple, but in my opinion, it was the biggest game changer. It is have a daily plan. What I found through my teaching and my education is that so many people have no daily plan. They have no idea what they want to do throughout the day, and they're simply just going to try to be reactive traders. While that could work at times, it's going to be a lot more stressful because you really don't know what's going to happen next. If you have no plan as to areas of interest for longs, areas of interest for shorts, places that we could pull back to and hold, places that we should reject to, etc., you need to have some type of blueprint, some type of structure to have the game plan for the day. So what I do every single day is I mark out and map out targets for ES and NQ to the upside, look for areas that we could pull back to, and also look for areas of support. And if that support breaks, where the downside targets will be. It doesn't matter what system you use, you should have some type of idea of what you're going to do before the day even starts. And then from there, all you have to do is have the price action hopefully match your plan. And then if it matches your plan, you're going to have your A+ setup sitting right in front of you. There are going to be times where you do have a perfect daily plan, but the price action simply doesn't match up. Maybe it gets too extended, there's no entry, the move happens too fast, or you hesitate. That is natural, but you'd rather have a daily plan that's accurate, but you simply maybe couldn't execute that day, rather than have zero daily plan and firing away trades left and right. I didn't talk about it much in this video, but over trading is also a big killer. But I think personally, by doing these 5 things, over trading will happen less because you're going to have more winners and you're not going to want to give it back. Most people who overtrade have a system in general where they need to take a lot of trades. It's a lot of shooting bullets, right? And some will hit and some will not. Futures, and in particular on prop firms, it gives you unlimited ammo. There's endless amount of trades you could take per day. But by simplifying your process, by taking less trades overall, and by default having this proper daily plan to execute upon, it'll make you overall more consistent and more profitable. Futures trading by default is one of the most black and white, but it's also the most volatile trading out there. You can really take advantage of the leverage that these trading firms offer you, but it's not as easy as just pass an eval and make money. In my next video, I'm going to talk about my preferred trading firms. I kind of touched upon it earlier in this video, but I'm going to break down certain firms and my personal strategies to get the most out of them. A lot of these firms have different rules, so you kind of have to do things a little bit differently, and so I'm going to navigate that all for you guys in the next video. Hopefully you guys enjoyed. I appreciate you guys for watching. Hopefully you took something from this and you can start applying it as soon as next week. Have a good rest of the day, have a good rest of the weekend, and trade safe.